Good evening, everyone. Today we have Mr. Arjun Dutt, who is the program lead at Center for Energy Finance at CEEW. Today, one particular topic that has been sort of in conversation everywhere is climate finance. We hear climate finance as a buzzword wherever we go, whether it's in institutes, research institutes, and even at COP, everyone is talking about climate finance. But do we really understand climate finance that well? Do we actually know what it means and what exactly is everyone asking for? So today, to demystify all of it, we have Mr. Arjun Dutt, and he's going to talk about climate finance, the history of it, where is the contention, and what are we looking at, and what is the ask. So, Mr. Arjun, please go ahead and give us a bit of history about climate finance.
Okay. Anshuman, thanks for having me. So, the low carbon transition, it requires trillions and trillion dollars in investments. Now, the challenge is that not all countries have the wherewithal to muster these investment flows, and particularly when we're talking about developing countries. So recognizing this fact, under the UNFCCC, under the Copenhagen Accord that was signed at COP15 in 2009, developed countries agreed to support the financing need of developing countries by mobilizing capital for their climate investment needs. So these investment flows were supposed to total 30 billion between 2010 to 2012, and then to rise incrementally to an annual level of 100 billion by 2020. Now the OECD tracks these investment flows, and the reported numbers have risen from 52 billion in 2013 to around 80 billion in 2019. So this 2019 figure is the latest number as per the OECD stocktake that was published in September this year, so basically a couple of months ago. Now I'll give you a bit more perspective on the composition of these climate finance flows. So basically this 80 billion, 2/3 of this is in the form of mitigation finance, a quarter of this is in the form of adaptation finance, and the balance is kind of cross-cutting. Out of the 80 billion, approximately 80 billion that flowed in 2019, 80% of the 80 billion is basically public capital flows, either in the form of direct bilateral flows between governments or flows from multilateral development banks that can be attributed to developed countries. A small 4% is in the form of loans given by export credit agencies, and the balance, which is around 17%, is in the form of private finance flows that is enabled by the public capital through instruments such as guarantees or co-financing or direct equity investments. And a third component or a third facet of these finance flows is that most of these finance flows are on commercial terms, which are investments that require commercial returns. So to give you some perspective, that around 27% of the public capital flows, that was 80 billion, is in the form of outright grants. Okay. A very small additional portion is in the form of soft loans, where below market rate interest rates are levied. But the quantum of these soft loans is not defined in the reporting, and it's a very small component. So overall, it's mostly commercial finance and a much smaller component of concessional finance.
Amazing. So, right here at COP26, this has been a major talking point. But we are hearing the news that it's at a deadlock, it's not moving ahead. So what exactly is the contention? What is the differences that are coming between countries, let's say between developed and developing countries? Where are they sort of not being able to come on terms with each other? So could you please tell us about that?
Sure. You're right. So Anshuman, you're right in the sense that climate finance has been an area of deep controversy in climate negotiations. Let me sort of explain why. So first, like I mentioned, the developed countries are supposed to deliver 100 billion by 2020 in annual flows. As per the UK COP presidency's climate finance delivery plan, published in the week preceding the commencement of COP itself, of course the 2019 figure was reported, that was 80 billion, but they also said that existing commitments mean that these flows would rise to the level of 100 billion only by 2023. So firstly, that's a full 3 years behind schedule. But even if we were to disregard the quantity of flows, there is great skepticism about the integrity and verifiability of the actual flows. So some countries or developing countries contest that the figures that are reported correspond to just reported figures or commitments rather, and not actual flows. So that's controversy number one. The second is that some parties contest that a large chunk of these flows, reported flows, are actually existing commitments that are reclassified as climate finance. Okay. So that is this reclassification.
Could you
business.
give us is OD an example of that?
Yeah, I mean, I won't necessarily at this moment invoke specific examples, but let's say existing commitment aid to a existing development aid that's been committed. If it's reclassified as climate finance, so that's not new and additional flows.
Correct.
It's just an existing line that has been classified
Smart
under
accounting.
exactly.
Yes.
A third aspect is that there are a number of these flows from multilateral development banks, private sector entities, and even others. They say that these are basically self-reported by these entities, and there isn't great rigor in terms of third-party verification. So again, there is some skepticism about whether and if these actually correspond to climate finance, climate-aligned investments. And the last and perhaps among the most significant is that, like I mentioned before, most of this is in the form of is on commercial terms rather than concessional.
Correct.
So if money is flowing at commercial terms, it will continue to flow to areas where money is flowing, but more is needed. An example of that would be, let's say, renewable energy projects in India which are commercially viable. However, what this will not achieve is that where money is needed, where money is not flowing currently. So those are areas where investment risks are high. Think about an off-grid project in a rural area, microgrid, where the borrower may not have the ability to pay, and therefore is not a bankable project from the perspective of lenders. Think about underdeveloped countries where investment risks are so high that investors are not willing to invest. Think about even adaptation. One reason why the share of adaptation finance is so low is that most adaptation activities don't have a commercial business sense. So you need grant capital to flow. If grant capital is lesser, adaptation finance will also be lesser.
Absolutely.
So the fact that most of this capital flows is in the form of grant capital is not something that necessarily caters to the requirements of developing countries, and that is the fourth facet of this controversy. And all of these need to be addressed, both the scale as well as the type of climate finance that is needed for the low carbon transition in developing countries.
That was a wonderful explanation. Now, I have just two more questions. My third question is: so at COP, we've been hearing that there has been some developments. There has been some some developments in this particular topics. Negotiations are going on, ongoing negotiations, but the outcome doesn't look very positive as of now. I mean, we still see there exists a deadlock. So I just want your opinion. Like, you have been here at COP26, you have been meticulously following the negotiations, you've been understanding, you are seeing different perspective, and because of your experience, you can understand where these things are heading. So what do you have to say about that?
So I think at this stage, you're not referring to the climate finance, but I think you're referring to the negotiations relating to the transition of the CDM to the Article 6.4 mechanism.
Absolutely. Yes.
So, like you rightly pointed out, the negotiations are ongoing, but the existing, differences between parties with regard to the transfer of pre-2020 carbon credits associated with the CDM to the Article 6.4 regime, those differences remain. So, a number of developed countries, as well as some developing countries that are allied with them, say that you cannot use carbon credits generated before 2020 for fulfilling NDCs in the Paris Agreement.
Okay.
And that would typically have been the biggest source of demand for these pre-2020 credits. Some countries, particularly India, Brazil, China, favor the full transition of existing carbon credits from the Kyoto Protocol regime to the Paris Agreement regime to basically ensure that whatever mitigation has happened, it is supported by existing flows as promised under the Kyoto Protocol. So given this difference in position, that there has not been significant movement, it remains deadlocked, like you indicated. And of course, we're nearing the end of week one. So it remains to be seen whether a techno-economic solution can be attained at all, or if a political solution could ultimately be something that greases the wheels and facilitates the creation of the Article 6 mechanism, and also more broadly tackles the other issues associated with Article 6, Article 6.2, and also Article 6.8.
Now, one last very brief question. We have seen India's announcement regarding its NDC. Mr. Modi delivered a fine speech, and he made so. And the targets are really ambitious, and it would require what I can say a significant shift in the way financing is done for these projects, right? So anything if you could help us understand that, like what are we looking at?
So, Anshuman, in terms of, India's requirements, of course, the net zero commitment by 2070, it requires, of course, much greater scale of financing. But if I were to just step back and look at the requirements of the developing countries in general, we need two kinds of shifts in terms of the climate finance. Considering, of course, the caveat is that it's actually delivered. So I'm not getting into that. Let's assume that the climate finance is delivered. Then what do we need? We need finance at a much greater scale. So the 100 billion annual commitment is not enough for the requirements of the low carbon transition, particularly the aggressive decarbonization that is being talked about. So in terms of what kind of scale would be appropriate, the recommendation made by the Indian Prime Minister in his speech of close to 1 trillion is more along the lines of the annual flows that we need to actually realize these low carbon investments that are needed in the developing countries.
And keeping in mind, when we say flows, we mean what is actually delivered.
Actually flowing.
Yes.
So, like I said, that I'm not even. I'm assuming that they're fulfilling the actual promises, but if they do, they need to deliver those at higher scale. And the second thing is, there needs to be much greater scale of concessional finance.
Correct.
Grants. Now, why we need this is because in the segments and in the countries where the capital is not flowing because of high risk, we need this grant capital to underwrite some of the risks, to lower the risks, investment risks for private sector capital in those segments, so that many more multiples of private capital can flow.
Right.
And why private capital is important is because the financing requirements of the low carbon transition, of net zero across the world, right? And even if it's not net zero, aggressive decarbonization trajectories, it's in the trillions and trillions.
Correct.
And public capital maybe can muster billions. So to marshal these much higher level of flows, you need private capital. Private capital will flow only where there is commercial viability, where you're assured returns commensurate to your risk. So if the risks are high, you want to lower the risk so that the private capital is willing to flow at affordable, prices and costs.
Yes.
So you need concessional capital to de-risk these segments, and therefore allow private capital to flow. So private and public capital sort of operate in tandem.
Amazing. Thank you so much. That has been a wonderful session. Our viewers would love to, watch this video and understand what climate finance is all about, because that's what been hearing. That's what this whole COP26 is about, climate finance, and it has been a wonderful session. And I would like to tender my absolute thanks to you for having this session. Thank you.
Thank you, Anshuman. Thanks for having me.
Have a good one. Thank you.